Hello everyone, I welcome you all in our second chapter of the concept of understanding candlesticks. Now through this chapter we'll be covering the various type of candlestick patterns, and we'll begin our discussion by understanding various single candlestick patterns. Before that, let us understand what exactly a single candlestick pattern means. So a single candlestick pattern is formed by using just one candle. They're composed of just one candle. It gives you direction about the market, and the size of the previous candle or the texture of the previous candle has no bearing or has no implication on the formation of this candle, and this candle forms a pattern of itself and gives you a view about what's to come in the market. If you look at the picture below, you see various type of single candlestick formation like a doji, spinning top, Marabhutsu, hammer, hanging man, inverted hammer, shooting star. These are the various forms of single candlestick pattern which are prevalent or which can be seen on the screen on day-to-day basis. So the various single candlestick pattern which we'll be covering in this chapter are the spinning top pattern, the Marabhutsu pattern, the doji pattern, the hammer pattern, the hanging man pattern, and the shooting star pattern. So let us begin our discussion with a spinning top pattern. So spinning top pattern, it does not give you any indication regarding the direction. It doesn't tell you what the market will do. It just has a lot of price action in it. You see a lot of buying and selling happening in the candle at each and every price point, and the candle almost has very less or no body in it. And the candle has a very small amount of body, and the upper and the lower shadows are generally large by nature, and they are much bigger compared to the actual body of the candle. And in the main body, if you see here in the picture here, that is the green body or the red body, the open and low are very close to each other for both the red candle and the green candle. And the color of the candle in general does not hold any significance. When I say significance, I'm trying to say it doesn't give you any indication about the market. But this is one of the most important form of candlestick pattern if you understand the price action. If you can have an understanding of the price action, it can actually form a very good base formation or a top formation for the days to come. And the next pattern which we'll be talking about is the Marabhutsu pattern. This is one of the most comprehensive form of candlestick pattern, and it generally gives you an idea about the trend in the market. And it is one of the only pattern which the history of the candlestick doesn't hold much significance. The prior candle could be a bullish candle, or could be a bearish candle, could be a green candle or a red candle. Once the formation of this candle happens, the previous pattern or the previous candle formation doesn't hold much significance in the market. The green candle here is the bullish Marabhutsu, and the red candle here is the bearish Marabhutsu. In the green candle, the open price is below the close of the price, and in the red candle, the open price is above the close of the price. Those are two differences between a bullish Marabhutsu candle and the bearish Marabhutsu candle. There are no upper or lower wicks in the candle, which means there is no shadow in this candle. Only the high and the low are just complete bodies of the candle. There is hardly any wicks formation in this form of candlestick pattern. Now let us understand what exactly is a bullish Marabhutsu. In the bullish Marabhutsu, the open of the candle is the low of the candle, and the high of the candle, that is the close of the candle, is also the high of the candle. The open is equal to the low of the candle, and the close is equal to the high of the candle. There are no wicks in this candle. Basically, there is no shadow formation in this kind of candle. The whole candle itself is a body formation. This is generally a very trend-changing pattern. Basically, what happens is, we can see here basically the intensity of buying is so fierce that the buyers are willing to pay even any price to get in the market. They're even willing to buy at the high of the day, and they're expecting more strength in the market to continue. And that is the power of a bullish Marabhutsu candle. That is, the buying keeps happening at each and every price levels. This is a simple example of bullish Marabhutsu candle. If you look at the circle drawn at the bottom of your screen, the prior trend has been a series of selling in the market, series of bearishness in the market. But once the green candle of Marabhutsu happened, although you might see a bit of wick formation, it's not an accurate Marabhutsu, but it's very close Marabhutsu. And once you see that candlestick formation happening in the market of Marabhutsu, you saw a buying happening in the market, and the buying gave you a return of almost 40 to 50% in the market. So that is the strength of a Marabhutsu candlestick pattern. Once this candlestick pattern is spotted, it is advisable to exit your short position in the market, or at least put a stop loss for it. And if you are neutral to flat position in the market, it's advisable to enter your longs in the market. And the stop loss for these kind of trades is always the low of the Marabhutsu candle. And a strong or aggressive or a risk-taking trader would enter the trade on the formation of the Marabhutsu on the same day near the close of the day, and a conservative or a risk-averse trader would wait for the completion of the formation and would take his position on the next day and ride the gains on it. The main difference here is this: a risk averse trader has a more trade confirmation in the market, but a risk taking trader will have always a higher profit from a risk averse trader. So there's always a give and take in each kind of trader. The next pattern which we'll be talking about is a bearish Marabhutsu. It is an exact opposite formation to the bullish Marabhutsu of the candle. The selling is so high here that the sellers are willing to pay any price, and they're willing to even sell at the low of the day. And the open of the candle is the high of the candle, and the close of the candle is the low of the candle. There is no wicks in this candle again here. There are no shadows in it. There's a complete body formation in this candle. And this is generally basically a trend changing pattern. If the prior trend is bullish, it's simply after the formation of this candle, we could see a series of red candles in the market, and we can see a lot of weakness coming in the market. And the intensity of the selling is so high, as I've already mentioned, that the sellers are willing to sell even in the lows of the day, and because they're expecting more weakness to come in the days to follow. This is a formation of bearish Marabhutsu in the chart. If you could see in the chart itself, there was a prior trend was bullish, and we could see new high formation every day. Once the formation of Marabhutsu happened, you could see a series of selling in the market, and we saw almost a gain of 35% for sellers in the market. If you're long in the market, it is advisable to put a stop loss or exit a position. And if you don't have any position in the market, you can enter shorts in the market. The stop loss for this trade again is the high of the Marabhutsu candle, and you can write your gains based on it. And how does one determine when to exit? It is always advisable to have a trading stop losses for your trade, as in when the trading stop loss is hit, you exit your position, but till the stop loss are not hit, you can keep riding on the gains which you make out of shorting the position. And the same logic applies to bullish Marabhutsu candle also. And the next candle pattern which I'll be talking about is a Doji pattern. Now this is actually very similar to a spinning top pattern. That is, there is a lot of wicks in the candle and the body is very less. It's negligible to no body in this formation. The opening and closing are very close to each other, but it provides very crucial information about the market sentiment. When I say sentiment, there's a lot of price action in it. All the buyers and the seller both have a say in the market, and both are trying to dominate the position in the market, but none of them are able to do anything about it, and the market ends up being a Doji pattern formation. Now the next candle which forms after a Doji pattern formation is very crucial. If we have a green candle in the market, we could see some strength in the market coming, and if we have a red candle in the market after Doji, we could see a lot of selling in the market, and we could see some weakness coming in the market. Now this is a classic example of Doji. Now once you see the Doji formation happen and the next day was a red candle, the market couldn't breach the high of the Doji candle, and we could see persistent selling in the market, and the market nearly lost 15 to 18% of its price, and we could see a decent gain for shorts in the market. So the next candle which forms after the formation of Doji is very important, and it gives you a crucial information about the happening in the market. And that's it from us on the single candlestick pattern in this chapter. In the coming chapter, we'll continue our discussion on single candlestick pattern and learn more about it. I thank you for your patient hearing. I'll see you in the chapters to follow. Thank you so much.